Dreams are for real. They push to make us hope, aspire, believe, persevere, achieve. Dreams make us better and make the whole world go round. This could be a story of you and me, if and when we find the right means, at the right time, at the right place. Banks and lending institutions are already working round the clock, transforming, consolidating, developing digitally, making credit accessible in smart, seamless, and secure ways, putting smiles on a billion faces. At Lentra, we empower lenders with tomorrow's lending ecosystem today. We are disrupting, we are transforming, we are building, we are leading with the complete cloud-native digital lending platform. We are democratizing credit through data-backed decisions, customer behavioral intelligence, and split-second processing and approvals. Welcome to the world of Lentra Lending Cloud, empowering lenders to fuel the dreams and ambitions of millions.
Good afternoon, ladies and gentlemen. It's an honor to welcome you all to our webinar on Account Aggregator Framework, Transforming India's Financial Services by Samathi and Lentra. My name is Amrit, and I will be your host this afternoon. Without further ado, let me begin with a short introduction of Lentra. Lentra empowers banks to fuel the dreams and ambitions of millions across the globe through digital lending transformation. A class-leading cloud lending platform, Lentra is designed and developed to empower banks with tomorrow's lending ecosystem today. We are one of the fastest growing enterprise SaaS companies in the world with award-winning products within our portfolio. With a partnership approach, our innovative product and commercial offering ensures the least disruption to our clients' existing systems with the risk of implementation and adoption carried by us. Today, we are trusted by over 50 clients. Today, we are trusted by over 60 clients for who we've built over 16 loan journeys and an ecosystem integrated with over 250 fintechs and over 60 OEMs. We are empowering our clients to democratize credit through intelligent decisioning and instantaneous processing. Ladies and gentlemen, I am privileged to welcome Ms. Charlene Gupta, the Head of Strategy at Samathi, to take us through the first segment of our webinar. Charlene is a BFSI professional with more than 20 years of experience in executing research and consulting projects. She drives the implementation of a cross-sectoral customer consent-driven data sharing system through Account Aggregator framework at Samathi. We are honored to have you with us today, Charlene. Over to you.
Yeah, thank you, Team Lentra, for inviting me to the webinar on Account Aggregator, and warm greetings to everyone attending the webinar. I'll just start by giving a quick introduction on Samathi, and then we'll quickly move on to the presentation. So Samathi is a Section 8 not-for-profit company, and we are working with a mission on building the account aggregator ecosystem. So let me just put on my screen, and today I'll take you through a quick update on the account aggregator framework, the spirit behind account aggregator framework, who are the participants, what is the status, and what are the potential use cases which are there for the entire financial sector community, including lenders, insurers, and mutual fund houses. So just give me a second. I'll put on my screen. Yeah, I hope my screen is visible to everyone. Sure. So let's just start with seeing as to what is the problem that account aggregator is trying to solve. India as a country is sitting on a very unique position. So as a country, almost every adult Indian in the country has a bank account. So today there are 860 billion Aadhaar seeded bank accounts in the country and more than 1 billion mobile phone subscribers. But as a country, we still say that we are struggling in terms of our access to finance, and some numbers which which show the extent of financial exclusion in the country are that if we were to say the credit serve segment in the country is just 20 to 21% of the Indian adult population. In terms of the MSMEs access to credit, we say that 20 to 25 lakhs crore is the annual credit MSME gap in the country today. Likewise, the numbers for insurance and mutual funds are again significantly lower than what you have as global benchmarks for other countries. So for instance, in India, the mutual fund penetration is at 1.85%, while the global average is 63%. So why are we in a situation where we have all the enablers in place, yet a large section of our country does not have access to basic financial services? And we see it as three parts. So starting as a country, when we started building the digital public infrastructure for financial services, it started with saying that we have an identity issue that was solved by Aadhaar. Aadhaar gave an individual identity to every individual of the country, and this identity could be verified electronically. Though we can still say that there are issues around KYC which needs further redressal, but as of now, we've made great progress on it, and with few more developments, this could be a sorted issue. Likewise came payments. Payments again in India was largely fragmented and addressed to by individual financial institution, but with UPI, interoperable payments have been made possible. So as of now today, for anyone to transact on their banking statement or bank account doesn't require an internet banking login or access to mobile banking services. Anyone with a smartphone can just operate their bank account. So this is something which is very unique to a country, to our country. In fact, more than 60% of our retail digital payments are on UPI. So we've solved the identity issue, we've solved the payments issue, but where is the challenge now? So the challenge currently is in the data part, where we are saying that there is a lot of data available for a customer, which can actually enable this customer to get services at favorable terms from financial institution, but that data is lying fragmented with different institutions. So as an individual, if I have two bank accounts, one insurance policy, one demat account, the data is just lying in each of these separately. And if I'm a SME, my GST records are with the GST portal. So if I go to a lender and I tell them today that I need a loan, they will basically, they will ask me to collect these documents, get your bank statements, your GST data from your last, let's say 2 years GST returns for us to be able to process your loan application. That puts a lot of cost on the system, in terms of causing inconvenience to the citizen and many times leading to a lot of drop-offs, and obviously on the institution which is offering this, where it basically entails a lot of processing cost on them. There could also be a risk of high fraud, because of which many institutions end up being conservative while making a decision to offer a financial service to a customer. This slide sums up the account aggregator framework in India as of today. So to start with, we need to understand that the focus of this account aggregator framework is the customer. So the customer is the focal entity, and what RBI has done is they have introduced a new set of entities called account aggregators, and they are licensed as NBFC to act as consent managers for the customer. So this account aggregator specifically acts on behalf of the customer and does two things. One, it allows the customer, it basically, allows the customer to share their data with their own consent. So any data which is flowing from one source to the other has to have a customer consent, and that consent has to be electronic and explicit. And there are detailed guidelines and a framework which has been issued by MITI on how that consent will be captured and given to the account aggregator, based on which the data share will happen. Second thing it makes the sharing of data completely seamless. So once the consent is there and the customer gives a consent, the data will flow directly from the source institution to the user institution using the API rails which the account aggregator has connected on one side with the FIPs, on the other side with the FIUs, which are the users of this information. Second thing which we need to understand is this framework operates in a very regulated environment. So all participants in the framework as of now are regulated. So the financial information providers, which you see as the box on the left, and the financial information users, which you see on the box on the right, they are entities which are registered and regulated by one of the 4 financial sector regulators of the country. The FIPs have been notified by RBI. Specifically, they have said who can be a FIP in the ecosystem. The recent addition to the list of FIPs has been the GST data, where GSTN has been approved as a FIP on Account Aggregator, and Department of Revenue is the regulator. So Ministry of Finance has been named as a regulator for GST tax returns. So the way it works is we need to visualize it as very similar to a payment journey. The customer downloads an Account Aggregator app. He, using his mobile number, authenticates his identity, and he then creates a data handle. Once he creates a data handle using his mobile number, the Account Aggregator will fetch his related financial accounts and show it to the customer. The customer can then decide, let's say, out of 2 bank accounts, 1 insurance company, they can say that, out of these 3, I want to link 2 of my accounts to Account Aggregator. The moment they do a linking authorization, they will get a OTP from the financial information provider, which is which is the custodian of this data on their behalf. And once a data handle is created and the accounts are linked, this is a one-time activity, post which the customer can share their data using this data handle, like the way today they make their transactions using their payments handle in any of the payments aggregator app. Another very important thing which makes this system very secure and safe for the citizens is that the data is flowing directly from the FIPs to the FIUs through the Account Aggregator in an encrypted form. And the APIs through which this data is passing from the FIPs to the FIUs are all standard APIs, the standards for which have been published by Rebit, which is a 100% subsidiary of RBI. And the process to share the data schemas, the templates, the standard, everything has been defined by Rebit. Even the encryption norms have been defined by Rebit. So there is actually no mechanism by which this data can be accessed to any third party out of this data pipe. In fact, Account Aggregator in themselves are data plane entities. They cannot read, access, store, analyze, do anything with this data. The data will directly flow from the FIP to the backend systems of the FIUs, which can then further be used for processing and coming out with various decisioning requests. So in essence, Account Aggregator has made data portable. It has empowered the citizens to use their data to get good financial services at favorable terms from the FIUs. The entities on both sides are regulated. So these are in nutshell, some of the benefits of Account Aggregator ecosystem. What I showed to you was a current Account Aggregator framework. This is what we envisage Account Aggregator at scale. So other than GST, CBDT, EPFO, DigiLocker, telcos, utility data, once it all starts flowing through Account Aggregator, it will make it a single channel access for any kind of decisioning, analytics-driven decision that the FIUs need to do to be able to make a product offer to a customer. And obviously, once the data sets becomes larger, the use cases would become more and more innovative and open up new customer segments for the financial institutions. Account Aggregator, if we look at the benefits, it is a digital public infrastructure. The benefits are on both sides, both for the individuals as well as for the market players. The individuals, it is a seamless convenience of secure data sharing using a data handle. So you end up carrying your data in your pockets, in your mobile phone, and it's not stored there. You just have the ability to give a consent for your data to flow from your existing financial institutions to potential financial institution as and when required. So given that a lot of data can be made available to the financial institution, it could actually lead us to a generation of information-based credit rather than collateral-based lending, and lot more institutions would be now comfortable making unsecured offering to a customer, given that there are so many more trust signals available on that citizen. It offers integrated view of financial health of a citizen, both to the citizen as well as for the entity which plans to offer an advisory-led service to the citizens. For the market players, again, the drop-offs reduce because you have put a tab on the paperwork. So there no more asking a citizen to submit his documents and then he going off saying that I'll submit the documents the next day. So the drop-off rates are coming down significantly. And progressively they need to get better as the system stabilizes. The second biggest advantage is the data is flowing directly from the source, so there is no risk of tampering the data. With more digitization, the operating costs are expected to come up, which will make small ticket lending and financial services viable for any financial institution. So, there is one very unique feature on Account Aggregator, which I didn't mention in the slide before. The consent which is given, and it is an explicit consent, will also capture the frequency of the consent. So it could be a one-time consent or it could be a recurring consent, where the objective is to monitor the performance, the financial strength of the customer on an ongoing basis. And this feature would be very powerful for lenders to keep a tab or a regular track of, is there any kind of stress building up in their portfolio? If yes, can they take on some early steps to avoid a situation where it goes into default by counseling the customer, reaching out to the customer? So a lot of early warning signal-based systems are expected to be based on this recurring feature consent. And finally, given that there is an integrated view of financial health available, so the wealth management, the personal finance management, the advisory services will get a big boost, because now they would have a complete understanding or a view of a customer's financial health and keeping in line with his age, demographics, his stage in life. They can actually suggest him a good integrated financial package, and that would actually mean more uptake for mutual funds, insurance, and even securities investments. I will also like to tell you about the early adopters of the ecosystem and where it is currently. The first version of Account Aggregator, it was launched in September 2021, which was the go live date, and over the last 1.5 years, we've seen great progress made. More than 1.13 billion accounts are today enabled on Account Aggregator, which means these bank accounts today have the facility of using Account Aggregator if they wish to share their data using AA rails. And this includes all the public sector banks and the large private sector banks. 4 million consents have already been shared and given and ended up in a successful data share transaction. We are seeing a healthy growth rate of 22%. As of today, we've got 9 account aggregators, operational account aggregators, 31 financial information providers, and 142 financial information users, which are transacting through Account Aggregator. So we are at a stage where we can clearly say that the first pilot and the version of Account Aggregator has actually been successfully implemented, and the results are in front of everyone. Another important development that has happened is that the participation in Account Aggregator system is now cross-sectoral. So it's not as if only banking data is available. The data is the data coverage is increasing. Out of the 142 financial institutions which are live as FIUs, 107 are RBI regulated entities, which includes all banks and large NBFCs. There are 21 SEBI regulated entities, largely brokerage houses and registered investment advisors. 12 IRD regulated entities, mostly from life insurance sector, and 2 PFRDA entities, which are the distributors or the POPs, which work under the pension PFRDA sector. Out of the 31 financial institutions which are live as FIPs, 12 public sector banks, 11 large private sector banks, 2 small finance banks, 4 life insurance companies have also started giving access to their data through Account Aggregator once a customer consent comes in, and even 2 regional rural banks have been onboarded. There is a very strong policy push where they are working with a mission or an objective or a target of getting all cross-sectoral entities live on Account Aggregator by end of March 2023. GST and integration is also expected to be completed by March 2023. And as we move forward, we expect that the work to get other types of FI financial information, which is CBDT, which is telecom, utilities, DigiLocker, will also start gaining ground. So hopefully in the next 1 year, we may be in a situation where the FIP base has been broadened completely, and any kind of innovation that can be built on data can be brought in. Again, a few more numbers, just to give you an estimate that, the early adopters, and the early adopters are the large private sector banks and a few NBFCs. And registered investment advisors, which have been using Account Aggregator successfully now. So out of the 4 million consents which have been given on Account Aggregator, 75% has gone towards lending use cases, mostly one-time underwriting use cases. Recurring is yet to be implemented, but we are expecting a few lenders to start implementing the recurring use case in a few months or a weeks from now. 24% has gone for personal financial management, where people are providing spend analysis or budget analysis to the customer based on his bank account statements. And there is some usage around demat account opening, right? At the time of onboarding, there is a need to collect the bank statements, which is now being shifted to Account Aggregators by a few users. An estimated 3,000 to 4,000 crore of loans have already been done through Account Aggregators. More than 50% of this is for MSME lending. Early adopters of the likes of Axis Bank have reported a 30% growth in disbursements, largely made possible because of lower drop-offs through Account Aggregator. The fraud rates, and this is the biggest advantage of Account Aggregator. We did an exercise with the policymakers, where the banks were asked to give their fraud rates related to bank statement. And that was earlier in the range of 0.54 to 1.1% for different banks. The banks have said that the clear-cut case for them for shifting to Account Aggregator is zero fraud rate. So this, I think, would be one of the biggest driver for anyone to consider shifting to Account Aggregator from the existing modes of PDF, net banking, and paper documents. And finally, we expect the drop-off rates to improve further and the operating cost impact on the financial institutions to come on once the FIP base broadens, which I've already explained in the previous slides, and the API performance of the Account Aggregator stacks stabilizes. So as of now, given that it's a new system, people are working towards, common SLAs, industry-wide SLAs and all. Once that stabilizes, we would see the adoption go up significantly. So this is a quick slide which shows how the Account Aggregator journey works like, and I'll just stop after this. So basically, as a user, once you're on an Account Aggregator domain, and typically these modules are integrated to the existing FIU journeys, right? So wherever in the FIU journey, there is a position or a place where you would ask the customer to submit their bank statements or financial data, you can instead have an Account Aggregator module set in there at that place. The Account Aggregator module will first ask the customer to verify their mobile. Once the mobile number is verified, it will be used to create an Account Aggregator handle for the customer. And the customer will need to select his bank where he has a bank account. Using the mobile number, all the bank accounts will be fetched and shown to the customer, which you can see in the third screen of link account. The customer will have a view of all his accounts with the FIPs or the banks he had selected before. He selects the bank accounts for which he wants to authorize a linking request. Once he does that, let's say in this case, in the third section, he says that he wants to link the IndusInd bank accounts. He will get a OTP from IndusInd Bank for linking the authorization. And this is a one-time activity. Once an account has been linked, after that, he doesn't need to repeat this step every time he wants to share the data. Post that, the Account Aggregator handle, using the Account Aggregator handle, the FIU, which in this case is an NBFC, will request the customer to share their account information, and it will clearly say what is the duration of the account information and what will be the frequency of the data fetch and the account for which consent is required. Once the customer gives taps on approve, the data will flow from the FIP to the FIU. So it is as easy as, today making a payment on your Amazon shopping. So the way you today transact and make payments, the same way you would be able to share data using account aggregator. And this in itself should add up a lot of value both to the citizens as well as to the financial institutions. So with this, I will end up the presentation, and I would be really happy to take up any questions we have as we move to the Q&A round. Thank you.
Thank you so much, Shalini. That was very insightful. I'd now like to call Ashwini Patel, the Senior Vice President of Product Strategy at Lentra. Ashwini packs over 15 years of experience in software, credit risk, and analytics solutions for banks and financial institutions. She brings in-depth expertise and proven knowledge in banking, credit bureaus, payments, and lending. The floor is all yours, Ashwini. Take us home.
Good evening, everyone, and thank you, Amrit, for your kind words. So we all heard Charlene Mam speak about various actors in the Samathi ecosystem, and now we want to introduce another important participant, the TSP or technology service providers. The TSPs collaborate with different financial information users and financial information providers to deliver AA products and services. They develop the foundation modules that can connect provider and user modules to the account aggregators. The technology service providers can also help fintech products in various areas like underwriting models, SME scorecards, product designing of apps, and more. Lentra is ecstatic to be part of this esteemed ecosystem and is a certified service provider for FIU modules and as a data analytics TSP. Let's have a quick look at the advantages of the Lentra's AA connector module. Ease of adoption. Lentra's AA connector module makes adoption of AA framework a very easy and a straightforward task. It comes inbuilt with the consent handling and data notification APIs. As a backward compatibility, we at Lentra have provided an ability to fetch the response in different formats. This is to ensure a dual working solution that can work both with the account aggregator ecosystem and the traditional bank segment analyzer. Secured and certified. Lentra gives security paramount importance, and the platform follows all the guidelines published by the Samathi ecosystem and is also certified by authorized agencies. As add-on services, Lentra Suite also provides aggregation and analytical services on the data that is received from the AA platform. Lentra's LOS Go now comes pre-integrated with the AA connector. We also have a suite of products that includes all the modules in the lending ecosystem. Hence, in addition to packaging AA connector module in our onboarding platform, we have also integrated with our other modules. Integration with our loan management system will ensure management of recurring consent and consumption of AA data, especially in limit managed and overdraft accounts. Our data analytics platform Cadence is also integrated with this ecosystem and can consume various data points that we get as an output. However, keeping in line with the existing way of Lentra's working, we are glad to also make this AA connector available as a standalone service to our clients. This will help our clients adopt account aggregator in different origination and management systems that they currently use. The purpose of AA connector is to shield the core modules from the technical nitty-gritties that are required for adoption of this framework. It also helps in ensuring complete compliance with the guidelines provided by the Samathi. In the recent past, we all have heard of the notion that data is the new oil. This has to do with the similarities in how two of these resources, both data and oil, become valuable. Just like oil, raw data isn't valuable in and itself. Rather, the value is created when it is gathered quickly, completely, accurately, and also is connected to other relevant data. As a data analytics TSP, Lentra is also creating various insights as the new data sets are being added to this ecosystem. Lentra is immensely proud to partner with Samathi and help both technical and functional adoption of AE data. Lentra will be glad to assist both incumbent and new financial information users to come on board this tidal wave of change.
Thank you, Ashwini. And like you said, there is already a few questions that have come our way. So we'll try to pick and choose which all we can take, and we'll try to answer any question that we have not been able to answer during the session. Okay, first up, Ashwini, I have a question for you.
Yes, Amrit.
So the question is as follows. So what kind of data can an FIU access through the account aggregator?
Okay, so currently we have bank statements that are available from not all banks are still not yet onboarded. Okay. Second is we have insurance data providers that have come in, and we have fixed deposits data. GST was announced in the recent past, so we'll very soon be having GST data, and that will be followed up by the Provident Fund data, the PFRDA authorities data. So that's the data sets that we are getting in the immediate future and currently. It would be followed by a few more data points that Samathi is trying to bring in. So what we are looking at now is getting all of this data, triaging it, and looking at one view for the customer for both of his assets and liabilities with the multi-bureau functionality that we have. So that's the value add here. Yeah.
Understood. Understood. All right. Ashwini, let's take another question. Okay, what is the criteria for an NBFC to become part of the account aggregator ecosystem?
Okay, so I'll cover it both for banks and NBFCs. So for banks, it is mandatory for the banks to become a financial information provider prior to getting a financial information user license. The reason being they also hold data that is required for this ecosystem to work. So it is more of a reciprocity principle here, where all the contributors are the ones who can fetch the data. With NBFCs, because there's no data that NBFCs can actually share for this other than because we are not having any bank accounts with them. So the criteria is that we need to have the registration done with Samathi Central Registry. Once this registration is done, they can either tie up with a technology services provider to get their FIU module tested, or if they have something in-house that they want to build, they can then connect to different A's and get that. But then there is a certification process that every FIU has to undergo. So this certification can be done by the authorized certifying agencies that are listed on the Samathi's website. So once the certification process is complete, then there is another request that will be made to Samathi to provide the production access. Once this is done, this is how the FIUs onboarding will happen. Additionally, FIUs will also have to tie up with the account aggregators. Now, so like the Samathi guidelines say, we need to honor an account aggregator's handle. So if you are getting a user on your platform who is already an ecosystem user, who already has an existing AA handle, the FIU will have to honor this. In case this person is new to the ecosystem, FIU can choose to onboard him to any AA of his or her of his choice. So that's the FIU and AA agreement portion.
Okay, I am seeing, thank you for that, Ashwini. I'm seeing a lot of questions which are directed at Shalini. One of the first questions that came your way, Shalini, was what are the typical use cases of an account aggregator apart from customer onboarding? And if you could also throw some light on which market participants are using those use cases.
Yeah, sure. So see, typically, the way account aggregator works, you have to just understand that it is a process which facilitates data sharing. So the use could be in any part of your journey which requires a data
share or data analysis. So one part of it is obviously onboarding. The other is risk assessment, right? So you would want to do a risk assessment for the customer, which again is a part of onboarding. And the third, which you've anyhow brought out in your presentation, is the recurring data fetch, where you can actually do a portfolio monitoring. Right? These are the typical use cases which we are seeing in lending. Other than that, in other sectors, specifically outside lending, personal finance management is a very powerful use case that comes up, because basis your consolidated financial statements, which could be your bank statements, your insurance, or even your mutual fund demat, there is a possibility that you could offer some advisory-led services to your customers. So that is another use case which is very prominent and has been picking up. We are also seeing some part of it picking up in insurance, where, for things like, doing analytics driven offer to the customer. So I would say, the use case for account aggregator has to be seen from the perspective of where and how you would want data, and, the current places wherever you're using data, that module in itself can be replaced by account aggregator. Right. So we are seeing a lot of traction in the MSME lending sector. In fact, more than 50% of the lending that has gone currently through account aggregator has been for the MSME sector. In fact, GST, once it is onboarded, which is expected to happen in the next 3 months, we would see a lot of cash flow based lending coming up, where basis their GST invoices, lenders can make a real-time offer to the customer. So there are a number of cases, and depending on the type of information that is available and your backend underwriting processes, a lot of this can be worked up.
Understood, Shalini. In fact, there's another question that is kind of related to this. So there's a question around why does an NBFC, a licensed NBFC, require a separate Samathi license?
Yeah, sure. No. So actually, I was really surprised to see if this is the kind of impression, because one, there is no license there is no license that needs to be taken for anyone to operate or participate in the account aggregator framework. So RBI in their guidelines have clearly said that any entity which is registered or regulated by one of the 4 financial sector regulators automatically are eligible to participate on account aggregator as a FIU. And even on the FIP side, they have limited it only to companies which are either under one of the 4 financial sector regulators, or the latest addition has been GS10, for which they have said DOR is a regulator. So specifically, there is no license process for anyone to be able to, integrate on account aggregator. If they have their, the only thing obviously which they require is a certificate of registration from their respective regulators. This is at one level. On the second level, licensing with Samathi, there is no concept of, you taking a license from Samathi, because this is a RBI-led framework. RBI, it's 100% subsidiary. Rebit has laid down the technical standards for account aggregator. They are the agency notifying it. Samathi is only a facilitating agency which is working on behalf of the ecosystem to ensure that the ecosystem scales up and it grows in a healthy manner. And plus, there are certain shared services which were required for the system to operate interoperably, which is a central registry, a token service, ecosystem participation terms, which have been hosted by Samathi on behalf of the ecosystem. So Samathi per se is not a licensing agency. We're not a regulator. We are a facilitating agency, which has come up because there was a need for an agency to work on the ground to ensure that the system grows.
Understood, Shalini. So taking this thread forward, and I believe as part of your presentation, since there are 9 operational account aggregators, so do an FIP and an FIU need into an agreement with all?
Yeah, so that again is a question as we need to understand how account aggregator ecosystem is envisioned to be interoperable. In account aggregator ecosystem, there are the protocols which have been defined by Revit are standard. So the APIs, the data schemas, the encryption standards, they have all been standardized by Revit. And hence, for the system to be interoperable, they have said that every FIP will need to necessarily integrate with all account aggregators, which means that currently if there are 9 account aggregators, the FIPs will need to be integrated with the all 9 account aggregators. And likewise on the FIU side, to start with, they can start with 1 or 2 AAs, but eventually to honor a customer's existing handle, which they may have created in some other journey, they will have to give the customer an option of their chosen account aggregator. So with this in mind, the idea was to say that do I need to then get into a legal agreement with each of the 9 account aggregators? So for that, we have a ecosystem level participation terms which have been drafted by industry experts. By signing this agreement, and this is a legal document which contains all terms and conditions other than the commercial terms, the pricing, everything has been covered in this agreement. And as a FIP and FIU, if you just sign this agreement you will automatically get into a legally binding agreement with all other participants in the ecosystem. So you just sign one agreement once, and likewise other participants have signed that same document, and you all get into a legally binding agreement. So this is something which we have again introduced as a digital common for this ecosystem, so that interoperability can be easy and efficient.
Thank you, Shalini. And in fact, moving over to the customer's perspective. Now, Ashwini, you might be positioned to answer this. So can the account aggregator view the customer's data as it is shared to FIUs? Maybe Shalini and Ashwini, you can both split your views on this point or question.
Yeah, so I also covered this earlier. So the data cannot be viewed by account aggregator. So the entire the way it works is, so there is a public-private encryption, a public-private key encryption in process here. So the FIU who is requesting the data and the FIP who's providing the data, right? So FIP, while providing the data, knows which FIU has requested this, and he will encrypt the data with that financial user's public key, so that only that financial information user can now decrypt it. This will ensure that no one in the middle is able to see this data. So yes, so just to say, in the end, none of the account aggregators can see the data that is flowing through the account aggregator platform. It will always be secured and encrypted. Shalini, you want to add something to this?
Yes. No, so Ashwini, you're right. Data, so account aggregator have been envisioned as data blind entities. So they cannot read, analyze, store, do anything with the data. They just act as data couriers, pipes between the FIPs and FIUs through which data will flow in an encrypted form. And in fact, Ashwini, I would think we can check this, but the FIPs actually cannot, they also don't know who the FIU is. The data is encrypted, and there is a mechanism by which FIUs can decrypt the data and read it. So to that extent, this system is completely secure and safe. The account aggregator cannot have any access to data in between.
Wonderful, wonderful. So let's say we have time for one last question. And now, speaking about data privacy and security, let's say there's a citizen who wants to track the overall consent given by him or her. How does that citizen manage that? And also, does he or she have the authority to revoke a certain consent after availing of a financial product? Maybe Ashwini and Shalini, both your views would be very helpful here.
So so actually the primary role of an account aggregator is to act as a citizen's consent manager. So what will so once a customer has given a consent using account aggregator app and his handle is created, he can log into his app, and at any point in time he can see a complete log of all the consents that have been given to him in the past, which of them are active, which have expired, are there any recurring consent, and there will always be an option for the customer to revoke any consent, for obviously for future data flow. Something which where he is given a consent and the data flow has already happened cannot be revoked. But for any consent which has not been fulfilled and or is in process, and there is a recurring pull that has been marked against that consent, he can very well go and revoke it on the app, and the account aggregator will have to notify the FIP and the FIU that the consent has been revoked, and now so the FIU should not actually raise any consent request on that client for going forward unless there is a fresh consent given by the citizen.
Understood. So thank you so much to all our participants, especially Shalini, Ashwini, for taking time and doing this for us. Have a wonderful rest of the day. Thank you.